How you doing, everybody? Thanks for tuning in to another episode of Auto Body 101. I am the Greater Estimator. This is the channel where we discuss all things related to auto body, auto insurance, things like that. Today we're going to be talking about insurance companies, why the rates are so high, why the rates sometimes go down, why the rates sometimes go up. All right. So basically, there are about 10 insurance companies in the industry which control about 80+% of the market share. 80% of the policyholders who have auto insurance. All right. Number one is State Farm. Number two is Geico. I believe Liberty Mutual is up there. Progressive is up there. Progressive is, I think, number three. And they're gaining on Geico. But it's State Farm, Geico, Progressive, Allstate, and USAA. Liberty Mutual is actually number 6. All right, so the way it works is like this. When you call an insurance company and you ask for a quote for a policy, the first thing that they're going to do is run your credit. And you might be wondering, what does my credit score, what does my credit history have to do with me getting an auto insurance policy? Well, the thing that insurance companies are most afraid of is fraud. Okay, so they look at it like this. They want to know, are you financially responsible? Do you pay your bills on time? Do you have a lot of outstanding debt? All right, because their thought is this. They don't want a policyholder intentionally damaging their car, bringing it to a crooked shop where the shop is going to run up all the bills, all right, and charge the insurance company for a bunch of things that they don't really need and are not ever going to fix. So the insurance company will pay out this huge amount of money. The shop will fix just a few things on the car, and then the shop and the policyholder will split whatever's left. Okay, and this actually does happen. And it happens a lot. And fraud is one of the biggest reasons why policies premiums keep going up and remain high. But yeah, so credit history, that's one of the first things they're going to check. The second thing they're going to check is your driving history. They want to know, are you a person who's accident prone? Are you a person who gets into a lot of accidents? Have you been in a lot of accidents recently? Do you put in a lot of comprehensive claims? Because the more claims you put in is the more money that the insurance company is going to have to pay out. The more people you hit is the more money the insurance company is going to have to pay out to fix the cars that you hit. Okay, so you have to keep these things in mind. Now, as far as the premiums go, what do the insurance companies actually do with them? Well, I'll put it to you like this. I was doing some research, and let's just talk about the direct premiums written. All right, the amount of money that the insurance companies are making versus the amount of money that the insurance companies are paying out. Now, of course, the insurance companies are going to have to use the money that they collect in premiums to pay out claims. This is how it works. All right. But the premiums written, now, to think about this for a second. The premiums written last year, it totaled 249, let's just call it $250 billion. Okay. $250 billion in written premiums, right? So that's the amount of money that they're collecting. Now, this is 34+% of the total U.S. insurance industry. It's more than any other line of insurance. So it's more than home insurance. It's more than health insurance. It's more than any other type of insurance. Okay. So now it says more than any other line of insurance. Like I said, now there were a total of $140 billion in direct losses on those auto insurance policies. So $250 billion came in, about $140 billion came out. So that creates a difference or a surplus of $110 billion. Now, the top 5 insurance companies, they have a combined market share of 58.32%. Okay, so $110 billion, 58.32%. So let's just call it 60%. The top 5 insurance companies came away with $60 billion in surplus last year. So that's the total premiums taken in versus the amount of money paid out in losses. They came away with about $60 billion. Okay. Now, it works out like this. And I'm not going to break down how much each insurance company got, but I like to focus on Geico because I'm knowledgeable about Geico. But State Farm has 16.15% market share. Geico has 13.51, Progressive 13.26, and Progressive is really gaining on Geico. Allstate has 9.09%. USAA, that one surprised me. They have 6.31%. Okay, so $60 billion went out to the top 5 insurance companies. That's how much they had in surplus after paying out claims. Now, what do they do with this money? Well, let's break it down. 13.5%. I like to use round numbers. Let's call it 10. Let's call it 10%. So $6 billion. $6 billion. What did Geico, we're talking about Geico, what did Geico do with this money? Well, of course, the first thing you're going to do is, you pay the taxes on the money and you take care of your expenses. But after that, a major portion of that money is taken out and they use it to pay for marketing, advertising. Geico spends a ton of money on advertising every single year. Now, in a 2019 study, it was shown that Geico spent $1.62 billion on advertising for the year. Okay, that is a huge budget. All right, now that exceeded the $400 million or less that other car insurance companies paid in advertising. All right, the only other carriers that came close were Progressive and State Farm. Progressive spent roughly $1 billion. State Farm spent about $627 million. All right, Geico by far spends the most money. Second is Progressive, but they spend the most money compared to the other top 5. Okay, now the reason for I don't know if you guys know this, but a lot of experts in the industry say that Geico should be credited with saving the television advertising industry. Okay, and the reason that is you remember back in the day when Geico came out with the caveman thing, right? And their main slogans were, "It's so easy, a caveman can do it," and "Save 15% in 15 minutes or less." Those were the major slogans. What that did, everybody got so caught up in the caveman thing and how funny it was, and how lovable the caveman characters were. Everybody started watching. Everybody loved the commercials so much that it forced the other insurance companies to step their game up. And they in turn had to start spending massive amounts of money on advertising, right? So Geico really forced them to do that. Okay, so Geico should be credited with saving the television advertising industry, but that's a story for another time. But yeah, so they spend all this money on advertising in order to keep you engaged, in order to keep the name out there. They need you to see them at the basketball games. They need you to see them during the commercials, during the baseball games. They need you to see them basically everywhere. Basically everywhere, on buses, billboards, subway stations. They need you to see them everywhere. All right, so that's what Geico and the other insurance companies do. And Progressive has been doing this a lot, and they've been very successful. They're very good. Their commercials are very funny. Liberty Mutual also. So yeah, that's what they do with the money. Now, something else that they do with the money is they invest it. All right. The insurance company, it's the insurance business is a business just like any other. And these companies want to make money. So the way they do that is they invest it. Stock markets, bonds, things like that. The one thing that they don't do, or most of them don't do, is give the money back, which I really never understood. I mean, well, correction, they give it back in a way. All right. Allstate, I know they have something where if you don't make a claim in like 2 years, they'll give you back some money, like actual cash in your pocket. But the way that most insurance companies do give back money is by lowering premiums. Okay. And the issue is this. Once you sign, it is extremely expensive for an insurance company to sign a new policyholder. They don't start making money from your premiums for a long time. Okay. So after about a year, maybe a year and a half, you might get a letter saying, hey, your premium used to be $200. We're bringing it down to $140. Congratulations. You're welcome. This is how they give back money. they will decrease the amount of money that you have to pay them on a monthly basis. And the reason they do that is, A, they've been making money off of you for, some time now. They've broken even. They're starting to make money. And B, they see that you haven't put in any claims for a very long time. Your driving record is very good. Your credit is still very good. The one thing that they don't want you to do is leave. So this is how they get you to stay. They start charging you less money in premiums because they know you can easily call up any number of other insurance companies and you will get a good rate. So what's to keep you from leaving? Charging you less money. So that's one of the ways that insurance companies give back money anyway. They're not really giving back money, but it's when you're used to paying, $200 a month, $2,400 a year, and now they bring it down to $1,400 a year. You're saving a significant amount of money. You're not going to leave at that point. You're going to stay, and they have every reason to they have every reason to want you to stay because they're starting to make money on you, off of you now. So those are the things that an insurance company does with their money. A, they pay for marketing, advertising. They have to keep their name, their image, their logo, their like Geico has the Geico Gecko, and they used to have the cavemen. They have to keep these mascots in front of you. All right, so that's why they pay so much money in advertising. And the other thing that they do with their money is they invest it. Okay, so this is why the insurance companies charge you so much money, and this is why they don't give that money back to you in a sense. All right, some of them do. I only know of one that does, and I think it's Allstate. The rest of them do not. But yeah, man. So yeah, this is why your premiums are high. They remain high for a while. And another thing is this: if your credit does not improve, if you do not become more fiscally responsible, and you continuously put in claims, they're going to do one of two things. They're going to jack your rates up so high it becomes prohibitive to remain insured for the policyholder, or B, they'll just drop you. If they do not begin making money off of you, making money on your policy after a while, they'll just drop you. All right. And again, a lot of factors are at work here. A, credit history. B, driving history. You get a lot of tickets, things like that. You put in a lot of claims, things like that. So yeah, and again, Geico, my God, Geico spends a ton of money on advertising, and Progressive is right up there with them at $1 billion a year. So yeah, man, that's just a synopsis of why the insurance companies charge you so much for premiums, why they remain high, and why, if you're good, they will decrease those premiums after a while. But yeah, thanks for tuning into another episode of Auto Body 101. My name is The Greater Estimator. I really appreciate you guys giving me your time, and I really do appreciate you guys watching my content. All right, if you like what you've seen so far, I do encourage you to like and subscribe to the channel. That way you can remain updated on when I drop all my latest videos. All right, but yeah, I'm The Greater Estimator. This is Auto Body 101, and I'll see you on the next video. Thanks for watching.